Hello, everybody. This is Brandon from Rampage Trades. Today is Sunday, April 21st, 2024. It's about 15 minutes until 3 p.m. Eastern Time as I bring you this video. And title is self-explanatory. You guys know I've been warning you for the last couple of months that there's been divergences everywhere. Took a while to play out, but we were handed a very, very nice trading week last week, and we'll go over some of that stuff. The title is Correction or Crash. It's not a crash yet. Okay, has begun. How we are trading the week of 422 to 429, 2024. And the disclaimer, pause it, read it. If you agree, please move forward. And so one thing that I want to talk about, and it was kind of uncanny how they did it. We were looking for the 493 area to be a intermediate support, what I call gates of hell for that matter. And we bounced from there. We back tested to 500 on this SPY, which we'll go over on the technical analysis, and finished the day around 495, leaving everybody guessing. And now everybody thinks there's going to be this World War III, but for now, folks, World War III narrative is done for now. Okay, it's going to come back and rear its ugly head. They're just jawboning and things like that. And I'll give you my take on what that really was. It was basically a nothing burger. It's a bunch of grown men, man-childs from Israel and Iran, basically saber rattling at this point. Tit for tat, eye for an eye, that kind of stuff. And it's very juvenile. But they're playing with billions upon billions of people's lives, and they're playing with fire. And this is not by any means done. But for now, I think that rhetoric is done, and I'll tell you why. Now, here is basically Friday's news article. Futures reverse all losses. Oil slides after Iran downplays Israeli attack, signals no retaliation. Both sides basically got their fill of violence, and to say that, hey, look, we have a one up on you, don't screw with us, that kind of thing. If you do it, we're going to do it to you. That kind of juvenile acts. Okay, it's a bunch of idiots running our world right now. But here's what I think is going on. They're signaling no retaliation. None of them really wants World War III. One thing that I think was exposed, however, is that you notice how Iran is just basically talking, taunting, and basically saying, oh, it was a nothing burger. We don't even know if there was an attack. Was there or was there not an attack? Here's what I did notice over kind of analyzing the situation, and I won't talk about it more after this. What I do think is that Israel shot down all the drone and missiles that Iran launched against it and could not penetrate into the Israeli air defense system. However, Israel, on its limited attack, showed the world, and probably to the Iranians, basically that they could penetrate their air defenses as well. And that was just a warning. And, basically they didn't go all out. They showed restraint. And Iran is now showing a restraint because they know if they escalate this, it's going to turn into a multi-faction war that could turn into World War III. But for now, nobody seems to be wanting to go down that road. So where does that leave us? Okay, it leaves us with the following. I think the sell-off has just started, and I've been warning you about the 2020 analog for months. All right, and I've identified it. It doesn't have to happen exactly on the same date, but it sure does rhyme, doesn't it? So the sell-off will be sharp, but it will not be without sharp intraday to multi-day rallies. Maybe it even goes for a week or so. And that probably is coming, and I'll show you on my technical analysis of a review of the SPX, the SPY, and I'll show you all of the internals and why I'm making that case. Am I bearish? Of course I am. Okay, but does the market go down in a straight line? It does not. Okay, some of these rallies will be rip your face off types, and then right now, when you look at the fear and greed indicator, people are going to get bullish in a second. All right, I've always told you that this crash, so to speak, is a multi-year, maybe 2 to 3 year long crash, filled with these type of sell-offs and then filled with rip your face off rallies that are prolonged and makes everybody feel like it's one of those what do you call it, bull markets that are starting, right? So what do I think about it? So where are we in terms of the market sentiment? Just remember last week, right? Right before Israel got attacked with the drones and everything else, the gold was telling you that something was afoot. I've been saying it for the last, I don't know, 5, 6, 7 videos, which is for about a month, that gold was moving like NVDA and that there is something going on. And I still don't think it's fully telling you or foretelling this little conflict between Israel and Iran. I think there's something bigger in store. And this is just a sideshow. Look here, don't look over here type of thing. And I think there's something bigger coming. I just don't know what that is. Gold is at 2,400, and I think pretty soon it's going to hit 2,500 in a short amount of time. There are other events that are coming. But let's talk about the fear and greed index. Oops, okay, I got that cut off. What a difference a day makes or a week makes. All right, we were in this greed area just a week ago. Now people are fearful. People are like lemmings. The retail traders, you can't trade like this. Now everybody wants to get into their puts, right? They want to go short. They want to buy protection. All of a sudden, fear permeates everywhere. I think we're going to chop around these levels right here, probably in this level, for a little while. Now, can we just completely just start crashing 2020 style? Of course we can, but even those had intraday swings. So what I'm telling you is don't jump the gun. Trade the markets based on what you see, what the market is telling you, and know your levels. That's what I'm talking about. Okay, so let's do some review of the technicals and where we are. Okay, where are we? Where are we in this situation? Well, let's start with our directional indicators, which is McClellan summation index, put to call ratios, okay, and VIX, okay. Be on the lookout for intraday or multi-day attempted rallies because it's not, again, going to go down in a straight line. Trust me, I've been doing this a long time and it just does not go down in a straight line. All right, so we're looking at the my McClellan summation index. And if you haven't seen my previous video, I would highly recommend that you do because you're going to learn what I was looking at on your own and see, maybe get that aha moment for you seasoned traders, how we do things here with my, methodology that I've developed over the last 30 years. And what I want you to know, though, is that I've been saying last week that these blue boxes are zones of targets, okay, and these are support zones. Okay, now the first zone basically in a couple of days it just didn't even stand a chance, but we have this major zone that we're now hitting up into, and can we continue to come down? We may, or we may just do a little blip and then resume back down, and I think that's probably the most likely scenario. So McClellan summation index is completely directional. Okay, and then here's that trend line. We've broken below there. Either we're going to go back up or we're just going to keep coming down and meet this area. There's a lot of meat on this bone, folks. So why am I a guy after basically calling for a just watershed sell-off that is coming? And it is. It's here. Why? All of a sudden saying be cautious because that's the way you need to trade. Okay, this market is highly unpredictable. However, we know what the direction is. The direction has changed, and I'll show you in my technical analysis why that may be the case. Okay, so this is McClellan summation index, fully directional. All right, we don't really have to worry about that any of these bounces are going to turn into these trend reversals. Trend reversals are not going to come right now because this is fully directional to the downside, and that's what you need to know. Now let's look at our put to call ratio, and this is a cause for caution. Okay, at this point we've hit kind of this confluence of areas, and I said that we had the put to call ratios rising, but it's not going to go up in a straight line. Look at this after Friday. All right, all of a sudden we went from people buying protection all the way back down to 0.65 on the put to call ratio. What is that telling you? Okay, Also, I must remind you, last week's action was exacerbated by the monthly options expiration week, right? Obviously, Netflix, I've been talking about that also. If you paid attention to that, you guys might have made some money on that Netflix puts. But realistically, what we've got is a put to call ratio that went from 1.15 down into 0.65 level. Okay, so what that's saying is extreme caution, right? We had some rising wedge here, and then we broke out and we came right back in underneath there. In fact, we're finding support right at that 50-day moving average. That is just, I'm not saying that we're not going to keep going down. Um, and it very well may be. I just want you to pay attention to the fact that the put to call ratio declined on Friday. All right. And those are clues. It's telling you, hey, remember, people are so bearish all of a sudden. In a very short period of time, we became what we call sort of oversold, right? And that's something that you got to watch out for, because if you guys have blindly, without a hedge, or just completely blindly bought and shorted the whole, and there are a lot of people that did that. I can tell you, hundreds of people that did that. Okay. And they may be right. We may gap down on Monday. However, these are things that you need to pay attention to. Just kind of prepare yourself that the market does not go down in a straight line. And what do I always say? Short the rips, right? That's what we're going to be doing. We're going to be shorting the rips. So where are we in terms of VIX? VIX is telling you the same story, right? So I said previously that, hey, look, this is the line in the sand, and this is going to be a hard nut to crack. So we basically, on that news of Iran nothing burger and Israel nothing burger, we basically went parabolic, and then it basically sold off. We're back below here. What does that tell you? It tells you that the market is still digesting and trying to figure out what is going on. Yes, we are elevated, but this type of a VIX movement is also foretelling you that, sooner than later, maybe it's not Monday, but I think something's going to happen on Monday or Tuesday, that we're going to get a pretty sharp attempted relief rally that may be coming. Okay. So basically, all of the indicators are now divergent, right? Which is basically telling us a couple of things. If they're this divergent, we may be going back down all the way down into this 17 level. And what a great way to suck in the freshly short retail traders and screw them and then load it up. And that's been like that for eternities, right? So we have the CCI that basically looks like it's forming some sort of a head and shoulders again. Yes, you can play that on the CCI, folks. And we are on a downward facing divergence. We got the stochastics rolling over, MACD histogram coming down, and then ADX is basically tilted at the top. Okay, so that usually is saying that the extremes are in place for the VIX. All right. So let's go over and look at further things. What has gold done to us? Okay. Well, gold. So this is gold, and there's nothing bearish about this, right? We're above all the moving averages. However, we have some divergences forming on gold, right? We have a MACD death cross forming, potentially death hook, not cross, but this is the MACD histogram. CCI is losing momentum, right? We're actually below that area. So can we expect some sort of a pullback down to this area if they're going to engineer a rally? You have to know both sides of the trade, right? At this point, yes, I'm bearish. Yes, we have longer term puts. Yes, we are positioned, but we also have hedges in place in case this rip your face off rally comes, and we're ready to take full advantage of it. But I think realistically, gold may pull back down to here, to where the X is, and then do something like this and break out. And I believe eventually we're going to break out. We're going to start seeing 25 to 2,700. You heard it from me first. In the next few weeks. All right. That is catastrophic, folks. The Fed admits that they may have to raise rates. Right? They came out and said, hey, expect no more rate cuts this year. Maybe into next year, 2025. What is that telling you? This market has priced in at least 3. I think it's priced in for 5 rate cuts this year. It's not going to come. We have hyperinflation, folks. U.S. dollar is worthless, and this is why they're doing the war dance right now. Okay, let's go into 10-year Treasury. Okay, 10-year Treasury. Another evidence that potentially a pullback is coming. Here's the RSI that's diverging. We have a MACD forming the death hook. The histogram is divergent. CCI is divergent, right? So, and on top of that, this may have been just a little bit of the top. Here's our kind of that impulsive trend line, and then we broke here, and now we have some support. So it's gonna basically chop around here, and I think if it pulls back, I think it could pull all the way back to 44.19. Remember, Fed needs to get this down to 42.50 or lower. It's going to be a tall order. Okay, they can't save the bond market and the stock market at the same time. But since they sucked in all of the retail people, and now they're basically running around with that, like their heads cut off. And now, as they become bulls, they're going to squeeze them. And then, as they become from bears, they became bears, and as they become bulls, then they're going to keep selling it off. That's the mechanic of the market, and that's exactly what happens as we go into this. So, what do I expect on the 10-year Treasury yield? I mean, we're at 46.15, folks. I warned you about this. We hit 47, right? Here's the gap that they're going to go. We got rejected. Eventually, we will fill it. And this is the trend line that you need to watch out for. Okay, but for now, I think there's a pullback in order, which is going to be conducive for a really sharp bounce if it comes. If things are bad and it's going to need a catalyst or another black swan type of event, like a Deutsche Bank failure, folks, that bank is just, I'll go over it later, okay? but realistically, look at the financials, okay? And that's going to give us a clue. I do believe that there is sector rotation going on right now at this point, okay? Let's look at US dollar. So US dollar, and these vertical lines are going to serve to show you what's going on. Basically, we have kind of a rising wedge situation. We have the RSI that is diverging. Again, it's familiar, right? MACD death hook forming with a histogram coming down. US dollar, however, is still kind of, following that trajectory, the upward trajectory. However, we're getting close to breaking down below these critical level on CCI. So CCI is telling you about a weakness that's coming. Rising dollar and rising TNX is bad for the market, folks. All right. So what's going on here? So what are these vertical lines? These vertical lines are basically my PPO ADX. If you want to learn more about that, you're just going to have to join our group or figure out how to do this. But here's the crush. All of these crushes that are forming right now, we're getting some bearish signals, but we did have a small bullish kind of a signal here, right, on the PPO ADX. Okay, this. They're upward facing, and so that basically led to a short term. If you line it up, we just went up a little bit, but now we're pulling back, and because it's making this, I do believe a short term pullback is coming. When we had these crush indicators, that was the signal for us to go long on the dollar, right? That dollar was in a rally, and this is how I knew, folks. All right, this is the rampage way of trading, or my way of trading that I've developed over the 33 years of trading. Okay, so dollar is basically maybe setting up for a little bit of a pullback. I don't think this is by any means over, but markets do not go down in a straight line. We went down 6 days in a row. All right, and can we just gap down? Of course we can. That's why you have your positions on, but you also have to have some hedges on in case we get a rip your face off rally, so you do not get damage, or exercise the hidden art of selling and booking profits. Okay, so all of those are kind of taught in our courses, and that's something that you need to be aware of. Okay, so what we have is now I want to go over the kind of the broader market indexes. Okay, so I'm looking at these, and these are the sectors at a glance. And these are kind of the candle thing, and basically it's ugly, folks. Everything they just threw the baby out with the bathwater. However, what are kind of holding up decently? Okay, so the building materials, energy sector actually went up, right? And I believe energy sector is going to be stronger. Okay, consumer staples. Okay, these are how you determine sector rotations into energy, into staples, consumer staples, and building materials. Okay, healthcare also showed some strength. Okay, so what they're doing is they're dumping these AI stocks, tech stocks, retail stocks. Okay, here's utilities. Look at that. Remember, in times of uncertainty, utility is a safe haven, and the financials is showing strength. because they can't have the banks go down yet. But I believe in the next leg down, this will lead us down, back down in the real estate. Okay, so there is definitely a sector rotation going on. If you look at one of those heat maps, which I'm not going to show in this video, you will see exactly what I'm talking about. Okay. Okay, so let's do some technical analysis on SPX. SPX is basically the cash version of the entire total stock market. Okay, it's not a SPY. SPY is just a, just a proxy for the ES, right? And SPX is our cash index. Why I like SPX is because it shows you gaps that ES does not. Okay, so this is the daily. This is the monthly. I'm sorry. We're going to go monthly and then go in on the time frame. Okay, sorry about that. So here is the long-term uptrend line, and then here's the long-term overhead resistance. So there you can see that even though we topped, there may be possibility because at these levels we have been rejecting off. Okay, I didn't draw the line all the way down there, but this is our long-term trend line. And what you're going to find out is that at these lower trend line levels, we're going to find support. So this is how we're going to see and develop our kind of the targets for the month, right? I believe that at the end of this month, we're going to be down here, but it's not going to be without a fight. And then this is kind of where you're going to be looking for. We're going to be looking for a the resumption of the rally ahead of the election cycle. Okay, CCI has been stable. I mean, we still have the MACD histogram going higher, and we had a bullish cross here, and we might be forming a death hook. I don't think so. I think we're gonna just kind of maintain that level. But if the sell-off ensues, I just don't think we're gonna get a multi-month sell-off. Okay, I think it's gonna be maybe 2 months, month and a half tops. Okay, this is 2020 right here. Okay, that's the pandemic crash right here. And so the target is that we have a lot of places for us to fall to, right? So this is our monthly area. And again, basically, how do we know we're looking for a potential pullback? And also, you got to understand that this 20 SMA on the monthly, as well as this 50, the blue line right here, are going to offer areas of bounces when we get there. Okay, so get this chart up, pause it, use it for your own advantage. Okay, this is how you know your levels. Okay, this is how you're going to be ascertaining these levels. And everybody asks me, well, how do you know that? Well, you got to read your charts. Here's our SPX on the weekly. All right, so let me get rid of this. So on the weekly, and the reason why I'm saying there may be, I didn't say there will be. Okay, I'm one of the biggest bears out there, and I could be the biggest bull when the time is right. But right now I'm bearish. So why am I saying be on the lookout for a bounce? Well, I mean, you're saying, are you crazy? RSI is coming down. It's been really, really impulsive. It looks like there's some room down there. We had the MACD on the weekly crossing over and then histogram becoming negative. And all of these will play out. But I'm saying on a day-to-day basis, on a weekly chart, that we got to respect this 20 SMA. This is 20 SMA. Okay. This is kind of where it's like a magnet, the prices kind of gravitate towards there. Now, if this breaks, yeah, of course, we're going to go all the way down, have some reaction here, going to have some reaction there, and we'll fine tune it with shorter time charts, right? Now, what are these again? These vertical lines, and those vertical lines are basically our PPO ADX indicators. Okay, so these vertical lines are basically telling you off of these. Off of this ATR level. We have a declining ATR, and every time they cross over this downtrend, we get a little bit of a sell-off, okay? That means that the range is expanding while the price is coming down. Okay, now, PPO ADX is right here, been bearish. It's been bearish here and here, right? If you go up, you see that it's correlative, okay? Learn to use this. Not hard, but it's hard to actually stay disciplined and use that. Okay, so the weekly, no doubts that this week we're going to be hitting new lows. I believe that. But I think on Monday and Tuesday, there is some caution that needs to be exercised. Okay. And henceforth, that's why I'm doing this video. Okay. Now let's go into SPY daily since SPX has served our purposes. And you saw this chart before. And then again, we have a complete directionality on the RSI. We do not have anything else that's going to refute that. In fact, we become a little bit more impulsive down to this area. Now, this area right here needed to break, and I didn't think that they were going to offer a huge amount, but you can see that they try to pin it here and pin it twice, and then they gave out the ghost the last 2 days, right? Now we are in a pretty decent sized area, and then obviously if we are going to sell off some more, this 490.76 will offer an area of bounce. But over the next few weeks, maybe this week, we take this level out, okay, and then start going towards the 480s. Guys, I want to tell you something. 486.34 is really when this becomes really, really directional, okay? But the market crash doesn't start until this level, okay? And what are these? These are all gaps. Gaps and support areas. These are the buy zones that are available to us, okay? Everything is sort of oversold. We're below this target area, okay? Remember what I said about CCI at these extreme levels, right? If you don't believe me, okay? We can get these rip your face off rally, retest this area. This area is important. This blue line right here is important. That's basically going to be, if we're going to bounce, I expect it to at least get to this green line, 80 MA, or backtest into that area and then fail. What a great area, especially if you didn't believe me and you basically, buying calls like everybody else, okay? But this is our daily on the SPY. All right, let's look at weekly on the SPY. Same thing. On the SPY, on the weekly, unlike SPX, we had a buy zone right here. That's our 20 SMA. Okay. This is why I believe we're going to get some reaction. We may get one of those tail candles and down into this area. Okay. This area is going to be confluence of support. Okay. Right now, this 20 SMA is creating a support. We have these sell volumes going up. Histograms getting negative. We have a MACD death cross. So you know that knowing everything that we know, that any type of bounces, as long as you know your levels, are going to be an invitation to short, right? And don't be skimpy here. I mean, this is not going to come around very often, right? Here's our PPO ADX, both pointing down. That is bearish. We also have accumulation distribution getting ready to roll over, right? If it starts coming down, we're going to, it's going to get real shortly, fast, okay? It's going to get really real, okay? Again, here is that ATR, average true range. And if we take this level and then just draw, okay? Okay? If it breaks higher, then we're going to get impulsive. I think, however, we're going to chop around this level for a while and then maybe move higher, okay? And these are kind of the tricks that you need to know about what the market is doing so that you can make some money, okay? Now, I wanted to do some review real quick, okay, about the 2020 market sell-off analog. I know, but I have to show it. So this is... I talked about this. This is an old chart. It's not exact, but it rhymes, right? This is from like beginning of February. Okay. And I said, well, what happens after FOMC this year? And, I said we were kind of somewhere here probably, and then we were going to sell off and then come right back down. I believe we're probably, although we don't have a gap, I think, on Friday and, all last week we sold down to here. I think we're right about there. And I'll show you what I mean by that. Okay, because if I change this is the current SPY, and so we, again, it doesn't have to be exact, but I think we topped right here, and so that area could be right here, and then this to here could be this area right here. So I think we're gonna probably chop around and try to back test to this area. Okay, maybe come right back up into like 505 to 510 area and then sell off sometime this week, okay? But it has begun. All of these tail candles that you see here are basically attempts at rallies, okay? So, and they're going to be sharp. I mean, you're going to say, oh, Brandon doesn't know what he's talking about. I think one of you guys commented that I was a short tard, and, I guess that's deserved. But the thing is that, in technical analysis, you have to see what you see. You can't make shit up. Okay, and this is what I've been seeing. This is my 33 years of culmination of trading experience that I'm imparting on you. Let's go over some ASML, folks. Okay, I told you about ASML. Our guys were in here. We've made a ton of. I mean, it was like a 25x trade, and I'll go over some of our alerts so that you can show you what we do at the alerts group. But basically, I think there's more downside. Come maybe pop a little bit on Monday, and then come right in, and I believe this gap will get filled. There's gaps everywhere on this, folks. All right, these lines, pause it, can serve you. Okay, it's not trading advice. You know, you're not part of our group. So, but watch it. I mean, this thing was a 20x trade if you bought last week's, and then we still have next week's options. And then if it bounces and it gets cheaper, we're going to add to it. Simple as that. Okay, we are at the early stages of divergences forming on the PPO ADX accumulation distribution. Look at this. We broke down, okay, and then we're at the peak of the ATR. I don't think this is going to come down anytime soon, because as it accelerates selling, I believe when this is all said and done, probably through the middle of May, I think we'll fine tune it. We're going to be down here, somewhere here. Okay, you want to make money and figure out how to do this, or just do your own due diligence. They just reported earnings. That's horrific, folks. And then our friend NVDA, I've been warning you about this crap, right? All right. Did any of you guys really listen? I mean, divergences everywhere. It finally played out. NVIDIA was a 48x trade yesterday. Okay, how many of you guys had returns like that before? Okay, when the market is directional, we're one of the best out there, folks. Okay, not touting our horns, but we stay consistent. Okay, it means you don't go all in. You got to learn how to trade. All right, so ADX, PPO ADX, it's fully directional. There's so much meat on this bone. It's a bloated pig, okay? And bloated pigs on any bounces are screaming out at you to short this, okay? All right, what about our friend Tesla? Everybody said Tesla was in a bounce. Everybody said, oh, yeah, blah, 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 right? Bullshit. Tesla basically has been telling you that it was not done. It's still not done. I told you from the beginning that I thought Tesla could be somewhere between $110 to $98 is the final target when we on this leg down. Okay, can it bounce? Can it try to take this ADMA? Guess what? That is your invitation to short. I warned you also last week about this descending triangle formation, right? What happened? We broke below. Folks, you got to trade opportunistically. You can't trade based on what everyone's saying or what Kathy Woods is doing. She doesn't know how to trade. She's like the worst trader I've ever seen in my life, folks. Let's go over some Deutsche Bank situation. Okay, Deutsche Bank is basically thorn on our sides, but that's understandable. But I do believe Deutsche Bank is reporting earnings this week, is it not? These are the levels, folks. And I'm being generous with these levels. And there's been divergences everywhere you look on Deutsche Bank. All right. There's nothing bullish about this. It is being propped up by central banks. And if you can nail it and be patient with it, and yeah, you'll lose some money while you're waiting for it. But I mean, this is, I think, a $7 to $5 stock. Okay. The other one that's intriguing for me for this week is AZO. Okay. That's AutoZone, folks. Consumers are tapped out, and they're talking about a lot of stuff. We are at 50 SMA, kind of teetering around this 80 MA. Somewhere between here and here are going to be opportunities on a bounce. I do believe we're going to bounce a little bit. If we don't, we're going to just sell off. But AZO is beginning to form some divergences, aren't we not? Okay, and so let's watch carefully. It can probably expand all the way to 31.30, but what a great short, especially if that price level occurs between Wednesday to Thursday. Now you can pick up very, very good Greek structure on your SPY puts. And if you're ballsy, because these are expensive premiums, right? You can buy the weeklies, okay? Only if you know what you're doing. Not financial advice, folks, but I'm just giving you some nuggets for you to go on, okay? What do I like, though, this week is LRCX. Now, LRCX, it has come down with the rest of the semiconductor week. The thing is, they report earnings this week, and it's going to find support here. It's going to ping around probably up to here. Okay, if we get a bounce, this is where it's going. It's going to chop here. This is where you short. Okay, where's the targets that I'm looking at? Okay, there's gaps galore in this area. Okay, and I'll probably do a full analysis, maybe if I have time, if I'm not busy making money this week. These are gaps. These are all legitimate targets from here to here over the next few weeks. Okay, do your math. Okay, and have the courage to understand that the markets do not go down in a straight line. Okay, folks? So in short, bears are awake. They're awake, guys. That's all last week was. Okay, they didn't get up out of bed. They don't know that they're hungry yet. Nobody's like really bothered them, right? They didn't brush their teeth yet. They didn't have their breakfast. They didn't put on their suit and go to bear work yet. But they are awake. And they're still sleepy and groggy, so it means that they might fall back asleep, put the snooze on the alarm clock, go back to sleep, and that would be analogous to these intraday and multi-day rips that I'm telling you about. Those rips are going to be highly profitable if you can catch them. Okay? I know that you guys haven't been listening because you think I'm this perma bear, but I'm telling you, I'm not a perma bear. I'm just go the charts. Okay? And I'm all about education, and I care about people not getting screwed by Wall Street. So will you listen now? Now, here are some of the earnings that are coming out. This is from Earnings Whispers. Okay. And for me, I trade more opportunistically. I think Tesla, it's down a lot. So if they pop, we're going to short that pop and then go down on Tuesday. Spotify is another one. Lockheed Martin's probably a call situation. UPS, it depends on if they report earnings and they report something good. I don't know. If you look at the Dow Transport, everything is getting killed. So, but these are notable ones. The ones that I'd be really interested in kind of looking to short are probably Chipotle. Pay attention to that. I'm not saying front run these. Lam Research, definitely. Meta, okay, that's been a bitch. I mean, it just holds up for some reason. Okay. IBM is always my favorite. Okay. Caterpillar, with the home builders and construction slowing down, because we're going to go into something bigger than a stagflation or a depression, maybe shortly. Okay. Obviously, Microsoft is one of my favorite. Roku, I've been saying that on my watch list off and on, but let's just watch. Also, look at this healthcare. Okay. Any of these oil type of companies might be a good play for the upside, especially if the market decides to rally this week. Okay, that is a possibility, folks. Does not go down in a straight line. So, long video again, but if you guys watch it, you guys would have really benefited last week. Okay, again, I want to create a community of like-minded traders, and that basically can talk the talk and walk the walk. Okay, and here's the thing: war rhetoric last week finally took the markets down to the 20 SMA. It basically woke the bears up. That's all it did, folks. We're not in a bear market. We're not gonna in a crash territory right now. That's why I said it's correction/crash. NVDA had impulsive sell-off, but there's so much more meat on this bone, right? And I've been warning you about this. Now, Deutsche Bank, okay, financials, I don't know what to make of it because I think it is propped up by the central banks. Okay, I think it's highly rigged. But I think time will come because I think that's the next black swan. I think this Israel, Iran, if there's something happens with Taiwan or Ukraine, unless somebody explodes a nuclear bomb, I don't know. I mean, nothing would surprise me at this point. But I think the financials are what's going to, start the next leg down. Okay. But there's a lot of meat left on this bone. It's just that the market is not going to go down in a straight line. Time for me to warn is over. Okay. And it's been a painful process, partly because, we had to adjust. But all the divergences were there. It was screaming at you. Time to strategize is here. What are you going to do? Now that you missed the first leg down, what are you going to do? I would say wait for a bounce. Short the rips. That's my other famous saying, right? Instead of saying let's rampage. Not all bears will make money, unfortunately, because bears don't know what the hell they're doing. And most of those new bears they just used to be bulls. Have you looked at the CNN fear and greed sentiment? All of a sudden, those fear level and that put to call ratio all of a sudden coming down. I guarantee you those put to call ratio rising where the retail is doing. And then we came back down to the 0.56. That's the smart money, folks. Institutions. They're going to screw you. Okay. Bulls and bears get hurt during crashes unless you know what you're doing. So watch for sudden sharp reversals. Those are what we short. Okay, when all of a sudden it looks like, oh, Brandon's wrong. He just shorts all the time. No, 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 no. You take advantage of those rips. We have directional indicators that has our back. Okay, watch list. VIX, SPY, QQQ, gold is the only one that's in green, folks. Tesla, Netflix. Netflix has some meat on the bones, but wait for a bounce. Lulu, I don't know how many of those see-through yoga pants that people could sell, and from China, I think it costs probably like $3 to make, and they sell you for $150. Think about that. Okay, talk about inflation. Lulu is an example of it. ASIO, we talked about it. Microsoft, Meta, Deutsche Bank. Deutsche Bank's a bitch. But I think for those of you that keep at it, don't throw the whole lot at it. But, you could probably buy a nice 100 to 200 contracts of these, maybe a month out or a couple weeks out. I mean, I'm not giving investment advice. If you want to find out what we're doing, you're going to just have to message us and then say, hey, I'm interested in joining your group. NVDA, ASML, LRCX is reporting earnings. ASML and NVDA has a lot left on the bones here. Beware of bear traps and bull traps that they're all set everywhere. Okay, bull and bears get killed. They both get eaten. Okay, so what's the trick? Know your levels. Don't FOMO. Okay, and be careful. That's all it is. Okay, so thank you so much for watching our video. There's some things that we're going to be putting out. I may do some earnings videos early on, but I think these videos are sufficient if you watch it all the way through. All right, I put a lot of time and effort into this. And then even if you don't join our group, I mean, I still want to make sure that I try to be as helpful as possible. And thank you. And let's rampage on. Make sure you subscribe and like us. Okay. Bye-bye.